Hello financial investors and welcome to the channel. My name is Brent and today we are going to be looking at 10 of the 90 Dividend Aristocrats that we provided over on the Facebook page. If you head over to facebook.com/financial investor 101, it's one of the recent articles that was shared out. It has 90 Dividend Aristocrats. We're going to be looking at the first 10. We are going to look at their price, their 200-day, 50-day moving average, and their dividend yield. Seeing over the past year, are they trading high? Are they trading lows? Are they offering a potential buying opportunity with a nice high starting yield? We're also going to look at their 10-year trend for their revenue, their net income, free cash flow, and then we'll look at their price to book, price to sales, and price earnings ratios as far as where are they currently at in comparison to the past and see if they are at a good valuation. I'm not going to be spending too much time on any individual stock because there are 90 and I want to make a few of these videos. Maybe we can do 10 one day, maybe 20 another day, and just kind of provide a lot of information as quick as I can. And if there are more questions in the comment section that you guys would like to have over a specific company, we can look at that company individually versus taking that time in these larger videos. So with that said, if you guys are brand new to the channel, have not yet subscribed, I see 80% of the viewers out there that watch my videos are not subscribed. So if you're interested in stocks, dividends, real estate, or personal finance, subscribe to the channel. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments or questions, drop them into the comment section below. I do read and reply to every single comment. And with that said, let's go ahead and get into the video. So I do have the list up on the left-hand side. I pulled the first 10. Starting with Tanger Factory Outlet all the way down to WEYS Waco Group. So those are the 10 here that we're going to be focusing on this video. Now the very first thing I want to go ahead and put up, it's the 200-day and 50-day moving averages. And we're going to look at this for the 1 year and the 10 year on each of these companies and kind of just see, are they trading high or low for its current time frame. I can actually throw the dividend yield in there as well. We can see over the past year, this company is trading at near 52-week lows. Recently, it broke down with the media scare of coronavirus. That's when I saw this company break down. I haven't looked into their earnings recently, but I know a lot of companies are going into earnings season, so I'll probably look at that. I just haven't focused on that specific thing. I do own this company, by the way. Quick disclaimer, I do own ticker symbol SKT. So looking at this graph, we can see that this is providing a roughly 9.3% dividend yield and is trading near 52-week lows below 200-day and 50-day moving average. So you're getting a potential buying opportunity buying into this. But again, I want to look at a few other financials. So what we want to do here is move out of the 200-day, 50-day moving average and look at revenue, net income, and free cash flow. This is also a real estate investment trust. So we also want to look at FFO with this, which is funds from operation. We want to take a look at this specific metric and see over the past 10 years, are their funds from operation moving positive? Are they moving negative? Just overall, where are their financials moving? So here I went ahead and put it in the graph. We can see up until 2000, maybe 15 or 16, this company was moving pretty positive. Here we can see that as of 2017 or so, their financials had begun to kind of dip down lower and lower. If we stick the price in here, we can probably see the price follows exactly what took place with their financials. Right about this point, their financials begin to kind of break down. The price broke down very, very hard over the past few years. Now, if I look at this in the shorter term, say 3 years, has their net income, which is in the red, begin to uptrend? Yes. Has their funds from operation begin to uptick as of end of 2019, beginning of 2019? Yes, it's begun to sort of uptick there in their funds from operation and their net income. Their revenue is up in the orange. This was about still positive. It's very up there, 478 million as far as the revenue. So as of 2019, it looks like that specific company has begun to sort of turn around. And while their price was affected in around 2017, 20 or so because of their financials kind of dipping down, it is now starting to kind of stabilize and make a recovery. We'll see how it kind of plays out in the future, but I kind of want to show that. Now, this one is a real estate investment REIT, a real estate investment trust. So I am not 100% sure if these metrics will actually really be useful. I suppose any company that's really sales driven, or you're looking at assets that's price to sales and price to book around 3 is fairly good or below. Here, the price to book is at a 3.2 and price to sales is at 2.9. So I would say that's pretty good as far as price to sales and price to book. If you look at their PE ratio, it is at a 16.44, which has recently increased. So their earnings may have recently decreased. So if I went and looked at their earnings for their past quarter, they may have done a terrible job, and their 10K, their yearly report may have just recently came out as well. So that's something I'll have to look at. Maybe if their earnings kind of shrunk down, which caused their price to earnings ratio to increase there by, from 14 to 16 or so. Okay, with that said, that is the first one, ticker symbol SKT, Tanger Factory Outlet. Now we're going to be jumping and taking a look at the next one here. This is HP, Helmerich, and Payne. Currently looking at the time frame over the past year, we can see that this one's providing a huge yield of 7%. Again, the price is trading both below 50-day, 200 moving average at $40.57. So if I look at the valuation for the past year, you're buying this at 52-week lows again, but this only paints one picture. It does look like a possible buying opportunity. You're getting a very high yield, but this is where I want to also dive into the financials. Where's its revenue going? Where's its net income? Where's its free cash flow going? This is not a real estate investment trust, so I'm not going to be bringing funds from operation into this. But here we can see over the past 10 years, 2015, look at the dip there with their revenue began to really decrease. Also in the red, their free cash flow again, they kind of dip down, while normally they would kind of be trending sort of sideways, but upwards slightly. And also, if you look at their net income, as of 2015, 2016, their net income had also begun to slope down. So if we bring in our price, so 2015, you can see this huge decrease in their stock price. As their financials begin to fall, guess what happened to their price? Also fell. Now they've begun to kind of stabilize here recently. And if we also do the 3-year mark here, we can look that as of maybe 2018 or so, HP has begun to kind of turn around very slowly. Their revenue beginning to pick up. Also, in the green, their free cash flow picking up slightly, but their net income has not really been picking up lately. And they had a pretty good year. Looks like maybe in 2018 going into 2019. 2019 didn't do really well for them. Maybe that could have been with tariffs. So the price and the stock price is kind of reflecting that. So it could be a bit of a risky move there, just because their net income isn't really moving forward. So the last thing here I want to look at is price to sales, price to book, and PE. So over the past 10 years, kind of looking at this, the price to sales and price to book is fairly low. This is HP. This is a computer company as far as HP. What other products do they have? I know them mainly for their computers, but you're getting almost a 1-for-1 value there with their price to book value. Also, a sales driven company, you're buying it at a 1.5. And their PE is very high, price in comparison to their earnings. So this is probably what's kind of hitting them, is that their earnings is just not doing really well right now. There's other companies, when you think of companies that are in that same sector, I believe this is the HP, the computer company. Because I don't own this, I haven't ever owned it, but I don't ever think of computers. I don't think of the HP computer line as something I would ever purchase myself. So kind of skipping to the next one, AT&T. Starting with our main things here, we'll bring in the price, the dividend yield, 200-day, 50-day moving average. So here we are. Over the past 1 year, we want to look at the 1-year snapshot. AT&T, is it trading at 52-week highs or almost near highs? Possibly. You can see here it's had some resistance, about maybe $40 or so, $39 to $40. Looks like it's hit that point, pulled back, almost came right back to that point, had some resistance and kind of fell. It's now at $37.43. It has broke below the 50-day moving average, but it's still quite a bit away and above its 200-day moving average. We can also see that AT&T offers a 5.48% yield. Now, looking at just the history, I just want to show you this, but just a few years ago, back at the very end of 2018, you could have bought AT&T for a 6.5% dividend yield that was trading around $27, and I do own this one as well. Quick disclaimer, I do own AT&T, ticker symbol T as well, and I have been purchasing it since back in 2018, 2019 or so. So looking at the chart here in the 1 year, I would say that this isn't the best opportunity, but if you're just a brand new investor beginning to buy into the specific company, it could be worth just kind of averaging in, and over time you'll just kind of dollar cost average. And if the company does dip a little bit further, you'll just each dollar cost average into it. Same with any other company. If you're starting small with small money, just buy your companies that you're invested in because you want to hold them and just dollar cost average over the time frame of your investment journey. So let's go ahead and move to our financials. Revenue, net income, free cash flow over the past 10 years. Is this company moving higher or lower? Kind of looking at it, we can see revenue moving higher. Let's bring in the percentages. It's going to show you a little bit better. So revenue is in the blue at 4.7% over the past 10 years on average per year. In the red, free cash flow about 7.5% on average per year, and net income 2.1% on average per year. So overall, they're moving positive. I don't think we did this with HP. You can see HP here. That net income again negative 115% over the past 10 years. Really want to show that really quick because I don't think I'd hit the percentages in there. So this is AT&T. So overall, moving positive in the positive direction with their main financials. They are trading at a high price in comparison to their history. If we bring in their price here, so they begin to kind of turn around here in this point right here. We can see a free cash flow again, and they kind of pick up. Also, revenue in the orange, right in this mark right here, began to kind of pick up. And guess what happened to the share price? It began to get picked up around this price as well. So you can kind of see these financials, how they affect the share price. Now we'll look at the price to book, price to sales, and price to earnings. And let's remove the percentages there. So it's still pretty well valued. Look at the price of sales. I believe AT&T is more of I don't know if it's a book value where you're buying a lot of the assets. I don't know if they own a lot of their own towers or not. It could be. When I think of AT&T, I think it's a service and sales driven company. So I would look at the PS ratio, the price to sales ratio, at a 1.5. It's below 3 by half. Also, price to book is at a 1.4 by half of 3. So I would think that these valuations are really good for this specific company. You can see that their PE is at high at 19.7. This is because their share price has been just moving higher and higher, while their earnings hasn't been picking up as fast as their price. So their PE ratio is just moving to the high end of the average. I would say this company's average is probably around 14 to 15, whereas 19 is a high for the current time frame. And I think that is good for AT&T. We'll move over to Universal Corp, ticker symbol UVV, and we will bring in our price yield, 200-day and 50-day moving averages. Look at the 1 year. You can see already we're at 13 minutes and we've only kind of covered 3. So we can see how these sort of snapshots of specific companies in the current time frame just takes a bit of time. So I will have timestamps hopefully in the comment section. So look for those. If you're looking for a specific company breakdown, look for those in the comment section for the timestamps. So Universal Corp, current dividend yield 5.72, pretty high for the past year. Not the highest, but fairly high. The 52-week low, it's not quite at the 52-week low, but in the current time frame here, and where it's trading, it is broke below the 200-day 50-day moving average, at $52.97. If we move to their revenue, net income, free cash flow over the past 10 years, are they moving positive or negative? This specific company is actually moving negative. So if we bring in their price in here, their price really hasn't fallen a lot. It's still up over the past 10 years, roughly 16%, but I believe this one could be downtrended in the future. If they continue to move this way with their revenue, net income, and free cash flow, you can see their share price begin to deteriorate. Now, looking at their other financial metrics, their price to book, price to sales, and price earnings, we can see that their price to sales is at a 0.6, their price to book is at a 1, and their price to earnings is at a 14.96, basically a 15 there. So these are fairly low, but I just don't I don't like their financials as far as just going negative over the past 10 years. I don't like to see that in any company that I am investing in. So let's go ahead and jump to the next one, which is ABBV, ticker symbol ABBV. Now, ABBV over the past 1 year, it is not quite at highs and it is not quite at lows. I would say it's maybe above average for its past 52-week here. It is currently trading at $81.78, broke below its 50-day moving average, not quite below their 200-day moving average. The price to yield, the yield there is at a 5.37, which isn't the highest it's been over the past few years. If we look at the highs, you could have got this one at a 6%. So really 5.37 versus 6 is not a bad deal. AbbVie is one of those pharmaceutical healthcare companies, so that's sort of its sector there. So as far as trading there, it could be potentially, it does have a little bit more upside possibly, but you can see there was a lot of resistance before it broke down here recently. Now moving over to its financials, net income, free cash flow, and revenue, net income, free cash flow over the past 10 years, looking at them percentage wise, are they moving negative or positive? As far as revenue, it's going up 88% over the past 10 years, or 8.8% on average per year. In the red is their free cash flow, up 119%. And in the orange is their net income. Now recently their net income has dropped as of, looks like maybe, let's put the time here. So end of 2018, their quarter reports haven't, let's see here, going into 2019. So here, 2019, their net income doesn't look to have been picked up. This could be because of maybe taxation, maybe they're writing something off, maybe they bought something. So this would need a little bit of research as to why is their net income dropping in 2019. Put it up negative here for the past 10 years, down by 5.18%. If we look at their price to book, price to sales, and price earnings over the past 10 years, and we remove their percentages, we can see that AbbVie is a sales-driven company. It's pharmaceuticals, services, and sales. It has a 3.7, so that's good for its PS ratio. It's not really a price-to-book based company. It's not an asset-based company, so its price to book here at a 41.38. Not really an important factor when it comes to AbbVie, and their PE is at a 37.77, so this could be due with their earnings as well. I don't know if I have their forward PE. I don't know if this is accurate, but forward PE here in the green as at an 8.3. So right now, 37.77, but in the future, potentially, they will be more profitable. Their earnings will increase or stabilize, and their earnings, their PE ratio will come down roughly to an 8.3% is what is expected for their forward earnings. So that is a really good ratio, and that is why a lot of investors I have been seeing over in the dividend community have been interested in AbbVie. Where did we finish? That's it for AbbVie. Let's move on to Mercury General, ticker symbol MCY. Price, yield, 200-day and 50-day. Look at the 1 year, and that's correct. Okay, as far as the 52 weeks or the past year, this one is trading near 52-week lows at $49.64, not quite below its 50-day moving average at $48.60. You can see here for quite a while, since maybe back in November, December timeframe, this one has just hit $49, $50 and has just been trending sideways. So what has been going on with this? As far as the dividend yield, you get a nice starting yield of 5.06%. when you're buying into the specific company. If we look at their financials, maybe that'll kind of play a part as why their price has been shooting down recently. So if we look at their revenue, 25% over the past 10 years, that's 2.5% on average per year. If we look at AT&T, we are getting more growth out of AT&T in their revenue versus Mercury General Corp. Now, their net income is negative, so this could potentially be why their price is kind of falling apart. They're down net income over the past 10 years, 43.82%, whereas their free cash flow is up 214%. So these numbers down here are probably the more important versus free cash flow, and they have not been doing really well. If we bring in their price here, yeah, this company really hasn't done a whole lot over the past 10 years, and their net income and revenue is probably because of that. They're just not able to turn profits. And let's go ahead and look at their last metrics, price to book, price to sales, and PE. This one right here. So you're buying I'm not sure what Mercury General Corp is in, but you're buying with a price of sales of 0.7 and a price to book of 1.5 with a PE ratio of 13.34. So that's actually really low. You can see that either their earnings has been increasing or their price has been decreasing, and we know that their price has been decreasing, which is why their PE ratio has actually been coming down, because their price of the company has been decreasing versus their earnings staying stagnant. So interesting one there. Exxon Mobil, I've seen a lot of investors also looking at this one just because of the current time frame. With oil getting beat up here in the short term over the past year, we can see Exxon is now trading at 52-week lows at $64.79, putting it almost $4 below its 50-day moving average. Quite a bit more underneath its 200-day moving average. And look at that nice solid yield of 5.29% over the past 10 years. This is its highest starting yield at 5.29. Just kind of want to show that off. So Exxon could potentially be a buying opportunity, but we'll have to look at their financials to kind of paint a picture of why is their price fallen by so much here in the short term. What went on here. So looking at the past 10 years, you can kind of see what happened here. Revenue, net income, free cash flow as of 2013 been kind of down. 2017 or so begin to kind of pick up. And if we bring in our pricing here, we can kind of see the price. Yeah, they're basically flat over the past 10 years. If you were a dividend investor buying into the specific company, you would have made some dividends in that time frame and some shares, but overall your share price your share price wouldn't have gone anywhere. It just would have been fairly stagnant. And we can see it's because their revenue, their net income, and free cash flow has just not been moving anywhere. So this company overall is just kind of trading sideways, kind of battling out with new regulations, change with technology now moving to electric versus oil and gas. So Exxon has been getting affected by that. And if we look at their price to book, price to sales, and PE ratio, and look at their numbers here, not without percentages, we can see that Exxon has been, that's at an 18.83. I don't believe this is accurate. I think that it might be a little bit lower now because of their share price dropping by so much, but we'll say that's 18.3. Price to book is at a 1.4, and price to sales is at a 1.0. Both of those are pretty good for Exxon. I know they have a ton of assets and they're also a sales-driven company, so anything within a 1 there is pretty accurate, I think, for Exxon. Let me know in the comment section below if you own Exxon and are buying more. I'd be interested in finding out. I don't own Exxon myself. I own Chevron, but kind of wanted to ask. Now, looking at the second to the last one, Franklin Resources, ticker symbol BEN. This is one I had been interested in the past. I just have not been buying this one. It's a financial. So this one is currently offering a 4% starting yield over the past 10 years, one of the highest points provided here, that nice high yield. It's not quite trading below its 50-day moving average, but it's fairly close at $26.21. Just a couple change away. It is trading below its 200-day moving average, so this one could potentially be in a good valuation opportunity if you are looking at this one and you believe that its financials maybe turn it around. Let's go ahead and bring in their net income, revenue, and free cash flow over the past 10 years. Let's look at the trend line. Okay, so revenue, 13.16% over the past 10 years. Not a whole lot of growth there in revenue. As far as their net income in the orange, negative over the past 10 years, down 13.19%, and their free cash flow down 103.1%. So their free cash flow, this kind of fluctuates quite a bit. It's a financial. They don't want to keep a whole lot of cash on hand. So I can understand them kind of being very fluctuating quite a bit. I don't know if they have a bunch of assets like Chase. I don't know if there's some sort of an asset company, but not one that it was on my sort of watch list, but you can see up for quite a while they were positive, and then just recently just been kind of downtrending. So I kind of just set it to the side, and it's collecting dust. Nothing that I'd want to throw money at for the time being, and the financials kind of speak for themselves there. Now, price to book, price to sales, and PE ratio, we'll look at these. So, price to book is at a 1.3, price to sales at a 2.2, both below 3, and PE ratio at 11. So over the past 10 years, you can see that price to earnings is at 11, which is fairly low over the past 10 years. So again, positive or negative for the company. Now we are moving to our very last company, ticker symbol WEYS, ticker symbol WEYS. This is Waco. We'll look at the current time frame. Quick disclaimer, I recently started buying this one and made a couple of videos kind of going over my buys. This one is trading with a dividend yield of 4.10%. If we look at it over the past 10 years, you're getting it at one of the highest starting yields of 4.10. It is trading below its 50-day 200-day moving average of $23.16 currently in the current time frame, putting it at a possibly undervalued as far as one of those Dividend Aristocrats, but we'll have to look at the financials to kind of find out. So we'll bring in our financials here and we will look at them percentage-wise over the past 10 years. So over the past 10 years, the revenue is up 34.85% or 3.4% on average per year. And their net income is up 52% over the past 10 years or 5.2% on average per year. Recently, their free cash flow has been dipping, now negative 93.98%. This is a footwear company. They have a bunch of different brands of footwear that they kind of sell. Very international business here. So business could be good, business could be bad, and they keep a lot of cash on hand or don't keep it on hand here, and that could be why it kind of trends up and down. If we bring the price into here, we can kind of see, maybe the price also kind of tracks along with their financials. And recently we can see that as of the past 3 years here, we'll kind of bring it into the short term. As of 2018, we can see they were kind of downtrending here for a little bit. What's the green? Free cash flow. Let's remove free cash flow here just for a second. Kind of throws off the numbers here. So 2016, their revenue and net income began to kind of tick downwards, so their share price kind of fell. Now 2018, their revenue, net income began to kind of pick up here in the short term, and their share price did bounce back here in the shorter term, but has just broke down now over the past year and a half from highs to lows, quite a bit there. So potential. Let's see here. Look at their price to book, price to sales, and PE ratio. This is a sales-driven company, so we're looking at price of sales. So price of sales here in the orange is at a 0.76. Their price to book is at a 1, both below 3, and their PE ratio is at a 10.82. Putting them at one of the lowest price in comparison to its earnings over the past 10 years. Oh, yeah. Let's look at 10 years here. So there you are. Over the past 10 years, you're buying this with a low PE ratio, one of the lowest that's been in its history. So that is the video. We covered all 10 of these stocks. Let me know in the comment section below, were any of these interesting to you? Did you enjoy this style of video? I know it may have been dry because of just a ton of information. So some of the ones that we saw that were trading near 52-week lows were Waco Group, Franklin Resources, XOM, Mercury General, Universal Corp, and HP. We had quite a bit trading below their at near 52-week lows, so there's lots of value out there. Now, is it worth buying if its financials are not actually moving in a positive direction? We live in a pretty tech-based company, world now where companies can start off very quickly, get into a niche and overtake it. Now, a lot of these companies already have their very strong niches, but you'll have to just kind of, do a little bit more research into any one stock that you liked in this video. So that is going to be it for today's video. If you guys did enjoy this video, again, hit the thumbs up button below. If you do have any comments or questions going over any of these companies, or want to let me know if you are actually invested into any of these, drop it into the comment section below. I would really like to hear from you. If you do own any of these, let me know how long you've owned it. Are you buying more of it here in the short term? And all that fun jazz. So if you have not yet subscribed, I would really appreciate if you do hit that subscribe button below. It really does help the channel. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.